Good evening to all of you. Welcome you to today's webinar. Today we are going to look at the developments since we met last Friday. In only 1 or 2 days, but we have seen too many actions within that, so I thought probably we'll review that. Till yesterday it was looking as if the market is going down, and today we saw a very big rally, probably the best rally in 2022 and one of the biggest gains in recent periods. So what triggered this rally, what triggered the fall? So both of that we will analyze and look at what we should do. Now on Friday, the Fed chairman, US Fed chairman said that the rate increases, US dollar rate increases will continue to happen till such time the inflation is won over. That is probably is implying that there will be more large rate hikes also to come. That is in September there will be a rate hike of 75 basis points. This is what is now coming through from his statement. And by December this year, we will see the Fed funds rate crossing 3.5%. Initially, the market was looking as if this particularly could be the terminal rate, and after which the rates may start to soften, or probably next year he may even cut rates. But his statement clearly indicates that even if he pushes it to 3.5% or 4% by early next year, this rate will continue to be there for a considerable period of time. The restrictive monetary policy will continue to be there, because though he hinted that 2.5%, which is the present Fed rate, is a neutral rate, he said that it doesn't mean that rate increases will not happen beyond that. So clearly it's going to overshoot and remain there for a considerable period of time. So if that be the case, then normally you have a difficulty in looking at the expansion of the market in terms of its valuation. We have had already discussions regarding the PE situation yesterday. That is on last week. That is, the PE is dependent on, to a very large extent, also on the US interest rate. So if the interest rate is going to be increased, and the Fed funds rate is going to come very closer to 3.5 to 4%, we should definitely look towards some sort of a shrinking of the PE. That is, the present PE ratio, price to earnings ratio, is going closer to the 20 to 21 mark. Normally this should come down, but in the last 5 years, the bottom in the PE that we have seen is only this 20 to 21, particularly in the Indian market, so in US, because Indian Nifty PE is so strongly correlated with US PE. So we see this 2021 being one of the most important base levels for Indian market valuation, as well as for the US S&P valuation. But if interest rates are going to go much higher, even if the US Treasury is going to remain around the present level of 3.1, 3.2%, the increase in short-term rates definitely will make people look looking for a much higher returns to come from the market, and hence they will be demanding a much lower PE. So this should be a natural corollary of an increase in interest rates. Plus, the softening of the economic activity should definitely lead to some sort of a contraction in EPS. Now the growth that they were getting till last year, or till even this year, financial year, is unlikely to materialize next year if the US interest rates are going to increase significantly, and thereby result in some sort of a softening in household spending there in US, thereby reflecting in corporate balance sheets. This should be a natural corollary, which means the EPS also should come down, and so the PE expansion also should stop or should come down, which means the growth in the stock valuation should be rather restrictive. So this is what the interest rate hike should materialize as far as the stock market is concerned. This is one of the most important bearings and functions. So there can be some volatility around the neutral rate, but whether it should go much above the neutral rate is a matter of debate. Now the neutral rate in US that we can right now look at is around 4,000 4,000 levels approximately. In S&P is approximately that right now, 40-50 levels right now. And for the present trailing EPS with this PE, we should be looking at this particular level is okay. But if the interest rates are even going to go much higher from the present level, and if the economy is going to contract, not resulting in sufficient amount of EPS expansion next year, then this level can slightly even drop down. So this is what we are looking at it. Now, whatever happens in US market, there is a strong correlation with the Indian market. Probably on a day-to-day situation itself, it happens most of the time, but sometimes there can be some lag, because today's rally has not fitted with what has happened in US overnight, or what is happening even with the US futures, or what's happening with the rest of the global markets. There were some gains in the global markets, but to the extent that the Indian markets gain cannot be corroborated with what's happening with the global market developments. But what happened after Friday, what happened yesterday, that is after Friday Fed chairman statement, was in line with the overall global development. Every market fell, Indian markets also fell. Percentage wise there can be some difference. But what happened today is something which does not fit with the rest of the developments. So what has happened today? Now, today what has not been written till now in the economic websites is, see, the MSCI, there is a index, there is Morgan Stanley Capital Index. Now this Morgan Stanley Capital Index, there will always be changes in this index, because this is an index based on which portfolio allotments are made by institutional investors. This is the index based on which portfolio allocation is made. It also gives some risk metric valuations and all. So this is a widely followed index for portfolio allocation and also for stock allocation. So there are emerging market indexes also. So there are some change in the composition of the MSCI index, which warrants some stocks to be sold, some stocks to be bought, some rebalancing will have to take place. But in that particular case, there is also an increase possibly of the weightage for a particular market. One. So this is MSCI rebalancing is also one of the reason. Second thing that what we are seeing is the internationally, Chinese economy has started to show a lot of weakness, and there are a lot of problems, whether in terms of employment, whether in terms of inflation, whether in terms of general economic development is concerned, and bank problems. With all those things, the Chinese economy is set to weaken, which probably could hurt the Chinese currency. That is, the Chinese yuan is getting now hit. The Chinese yuan is getting hit. And when the Chinese yuan is getting hit, there is generally when the particular economy, this is more confined to what's happening as far as the Chinese economy is concerned. Does not fit with the global markets, but happening confined to Chinese development. When that happens, there is a tendency to pull out, both in terms of investment as well as in terms of portfolio investment, as well in terms of FDI. Now we have seen even in the present case of manufacturing of Apple 14, the new models, the lot of shift in the manufacturing base towards India. So probably there is some sort of development connecting to the Chinese pullout, the pullout from Chinese investment, both in terms of from the FPI inflows as well as in terms of the stock selling, and as well as the from investment side. Now that particular flows to some extent is flowing into the Indian market, which is relatively better placed. Now we will get the GDP data tomorrow. We will have the GDP data tomorrow. And definitely this GDP data, and also with the collections that we get in the GST collections that we are getting, and the overall what they say is the trends that have been the high frequency indicators, and also the movements that has been mobility movements as taken from Google. All these things shows that the Indian market is definitely on a much better footing. And also we have seen the retail data coming as far as auto companies are concerned. So all these things, and also the festival season is approaching, so which means it could be a good season for the auto companies compared to the last 2 years because of the pandemic. And these developments are contributing towards a little more bullish view about the Indian economy. So probably we are getting a better picture. Tomorrow we'll get a better picture of GDP. But whatever it is, that is, Indian economy is definitely looking to be better placed compared to its peers, as well as compared to the growth in China that is taking place. Then third thing that we saw today was a commodity hit, except for crude oil in China and other places. So there is whenever the commodities fall, it translates into a gain for auto stocks here, because the commodity consumption is very much. So those companies which are consuming commodities, they also have a benefit of that. Then of course there is some view bullishness about some sparks which have been created after Reliance AGM that took place yesterday, depending based on their approach towards new energy, towards renewable energy, and as far as the telecom sector is concerned. So based on all those things, we are getting a much visibility as towards the growth of these particular companies and their contribution to Indian economy is concerned. So these positive sentiments probably help the market to turn around. One. Second thing is, of course, there is a short covering also. So once what started as short covering also resulted in some long buyings, because if you see the open interest addition, there's an open interest addition that took place today. When the open interest addition takes place, that means probably that could have happened is the shorts would have been covered and new longs would have been created. So that's a possibility, because if it is going to be the otherwise, then probably the open interest would have only reduced. The shorts would have got eliminated and probably the open interest would have got reduced. But that did not happen. When the open interest increased, which means probably the short positions were covered and the long positions were entered. Then if you see the rollover also, there is the expiry rollover. It was quite good as far as the August to September rollover is concerned also. The Nifty futures rollover is also good. And of course the Nifty futures premium tapered off today after hitting 90 to 100 points yesterday. It tapered off to 45-50 points at some point during the day. So all these things definitely look towards pointing towards the bullish character of the Indian market, notwithstanding the concerns regarding valuation, because we have already highlighted that when you approach the subject from the valuation point of view, except for value companies which are India, value companies when we mean there are a lot of companies which we already mentioned to you, probably something like Tata Steel, some of the steel companies, commodity companies which are there. Then a lot of PSU sectors which is there, like SAIL, NTPC, ONGC, REC, then Oil India, BPCL, all those, most of the big PSU companies which are mostly in the value segment. And there are, of course, there are a lot of value other companies which are in the value side also for investment. So except for trying to understand these particular stocks, rest is very difficult to be fitted in the normal corporate finance fundamentals, because if you look at the Indian company's valuations in terms of its peers in US market, then probably we can't explain the rationality for the investment from any particular ratio is concerned. So it needs a new theory to justify this type of valuation. So if you approach from a manager point of view, from investor point of view, from looking from outside, and you have a universe of stocks to buy from outside, then picking these stocks from the valuation point of concern is going to be difficult. But that's on the micro side. So the investment is coming more towards the macro view, that about the Indian economy, about its overall development, and probably these things, the view that is going to get reflected in the Indian stocks in future. So most of the stocks in India are still considered as growth stocks and not as a value stock. So whether it is Reliance, whether it is ICICI, or even HDFC Bank, so most of these stocks are considered as growth stocks, and lot of justification is coming from the reason that probably we are looking at the forward extrapolation and probably looking at those companies having a good amount of much greater cash flow and EBITDA profit in years to come than what is being anticipated. So that is the only way probably we could justify its present valuations. But that's the reason why when we said initially the fundamentals versus technical analysis. So in India, a lot of important stocks, it is very difficult to pick up from the fundamental side, and a lot of managers have suffered because of that. Because you look at from the fundamental side to shed a lot of companies, then you go for some other type of companies, it doesn't work. So in India, mostly the growth style investment has worked much better than value investing, despite being patient for a considerable period of time. So this market has to be approached strictly speaking from a technical point of view rather than from a fundamental point of view, and fundamentals only we can apply to certain stocks and certain sectors here, and it is a question of technicals which play a greater role into justify the buy and sell as far as Indian market is concerned, because of the difficulty in understanding the valuations from any point of view. So the chart also plays an important part. That's what we are saying. We highlighted the reason we have been having so many webinars on the fundamental side also for the last couple of weeks. It's only to give you some appreciation of the of certain fundamental ratios which should have an impact on the Indian stock prices, whether it has or not, on probably the floor price and all those things, whether it comes to that particular price or not, that may or may not come through for a lot of stocks. So, but that we can't help it. So we have to see that from the practical side, this is what the company should be really worth. But what to do? It doesn't come to this level. So okay, when it comes closer to that, or when it's around that particular price, so shall we look towards investment, also as far as trading is concerned. Now one classic case that we have highlighted is still with Tata Steel. Though the commodity prices may be hurting Tata Steel for the time being, when it comes down, when it looks like going up, the amount of profit, the return that you can get in such stocks will be very high. So please keep an eye also on the technicals of such companies when it makes a bottom and makes a turnaround. So as far as this market is concerned, we need to put a screener in terms of the technical parameters also. Now some of the technical parameters we have already highlighted in terms of whether you can go for the simple things. Probably could be the moving averages, then the pivot point breaks could be another point, and also you can decide whether you want to be a trader on a 1 hour chart or probably on the daily chart or weekly chart, depending on your the number of trades that you want to put and the time that you can spend. But we have also highlighted that the very simple thing is to note the patterns and do the trading accordingly, depending on the time that you can spend, and also whether you need you can do it manually or whether you need an algo system to feed. Because these days one thing is that the speed. Now yesterday the price Nifty fell to 17,165, but within half an hour it was up by 200 points. Now it could not have been very easy for individual trader to think about that, because you will still be thinking that in 17,365, 370, you will still be looking at the market is only is bearish and probably it will start coming down. But what happens is that when you're having a view like that, it starts to climb and you can't digest, and next day it has a gap up open. The basic problem now that we are facing right now in the last couple of months or couple of since last year itself has been huge gap ups and gaps down, which does not give you a proper point for a stop loss position or for an entry and exit, except unless you do it on intraday, which could be choppy on most of the days. So today is a day which is not choppy, but there are a lot of days where it could be choppy, probably resulting in both sides whipsaws taking place, and probably the loss could come. So sometimes when you are on the position trade overnight, it just reverses like yesterday and then you are out. Okay, because somewhere you have to put a stop loss, and today you are thinking that it is a short position, you are on the short side, today it gaps up, so you are finished on either side of the market, unless you have been lucky enough to spot it and in intraday base itself at some stage on Friday to go for a sell and cover it yesterday, and then looking towards some sort of a long position either yesterday evening or today. Unless that has happened, it is not a market where probably you could have still made money out of that. So unless you are a consistent bull and not putting a proper stop loss. Okay, so now let's look at the chart to look at where we are and what strategy that we can follow. This is as far as Nifty is concerned. Now Nifty, let's look at first the bigger picture. That is let's look at the monthly, weekly and charts. So monthly, today is the last day of the month, so it has closed very nicely, and it has also closed about 3 months high, which means that probably this is a market which has to be bought on dips. So the dips can come, and the dips can come up to even 16,410, which could justify the market for the present value. But whether it's going to come or not, we don't know about that. So now let's look at the weekly chart. See what happened is this week it just crashed to a 3 weeks low. If you see, this is a 3 week low. It came down very closer to that, and then started to rally. Now it has now moved above the last week's high. The last week high is 17,726. So that means since it has moved above 17,726 on a weekly chart, we have to consider that 17,166 is a very important low on a weekly chart. And now we should look towards buying on dips in weekly time frame, with a stop loss of 17,166. So on a weekly chart, this has definitely turned bullish. In a monthly chart also, it's looking very good. It is above all the important moving averages right now. So it is in technically speaking, we are in a bull market position as far as Nifty is concerned. Now we look at the daily chart. So see, this is a pattern which we need to carefully examine. So we have already said that the stop losses should not exceed 1 day range. 1 day range should be there. So yesterday, when it started to crack down, see, for example, higher, we said go for a lower. If this could be a top if this low is penetrated, because this then will become a lower top. So we can look towards some sort of a bearish scenario. Now this is a lower top, so probably you could have gone short below 17,487, but when it opened itself, it was 17,188. So I think there's a huge amount of stop loss probable difference could have come. So we could not have taken this trade yesterday because of the gap up trade. So this is trade we had to pause despite being on the technical and understanding being clear. Now today it has rallied, right? So it has even gone past the pivot high, which is 17,726. But we are not convinced about this setup. The reason is that we should get a lower bottom. Okay, we should also get a lower bottom. So here question is, there is a bottom. So we need to look at some sort of a lower bottom. So we should wait for some correction to take place, and after a correction, if it starts cutting a particular day's high, the corrective bar high, then it is better to go long. So that is the best approach that you should have, because here right now it is just is a breathtaking rally. It's a breathtaking rally, and this particular low should not easily be taken off. That is 17,401, because this was a huge rally that has taken place today with the 375 points intraday high to low. So normally such huge bars generally should not be taken off that easily. So we should have 17,400 as a place where probably even if there is a fall, I think we should be looking towards some sort of a rest around that level. Now having gone above this level, then we should have at least if the correction has to take place, it has to come below this particular, the close has to come below this high. That is we should have below this close, which is 17,604. So a close below 17,604 is the place where probably we should be looking towards exiting. If at all you are long, 17,600 close should be considered for an exit. 17,600 close should be considered for an exit, and then you should look towards buying on after closing that. Just wait and see how much fall it takes place. Then above, suppose if it does not cut below this, but again after a correction it starts going above a corrective bar high, then we can go for a long. So at this situation, those who are long should keep 17,600 as a stop loss for a on a close basis. Now let's look at the moving averages also in this case, 10-day and 5-day moving averages for a stop loss. Moving average, we will put so this is let's put a 5-day moving average first. So 5-day moving average is now coming at around 17,000 547, right? So 17,547 approximately is the place where we are getting the 5-day moving average. So you look at the 10-day moving average. So 17,547, and then this comes at 17,653. So these are all should be offering some important support. So 17,640, 653, if it comes closer to that particular place on Thursday, that is tomorrow being a holiday. So 17,650, 653 should be around that level should be the first support. Then failing which it can go up right up to 17,550 levels. So it should if you want to look towards buying, we should look towards buying in one of these two levels. If you're buying on dips straight away without waiting for any correction, and then the stop loss now should come below the 17,401 itself. I don't think so it is going to come much below 17,401 for the time being. So the strategy must be to wait completely towards some sort of a nominal pullback, and that pullback normally we should see even 350 to 400 points correction can come, but that is 17,750 minus 350 means 17,400. I don't think that's going to happen, but at least we should wait at least for a correction which is towards one of the important moving averages, which could be a 5-day moving average or 10-day moving average. So the 5-day and 10-day moving averages are placed at 17,547 and 17,650 levels. So we should wait at least for a correction around that level before we can look towards considering ourselves on the long side. But whether we should be already bullish or not, I think we cannot be bearish. Definitely we are bullish, but where to buy? I think at this level if we buy, we are not getting a proper stop loss. So till such time we get a proper stop loss, we should wait. What is that proper stop loss? It should be 1 day maximum, 1 day range, and that 1 day range, so we should buy above a corrective bar I and then put that low itself as a stop loss. Right now we should wait for some correction before we go for that. So to that extent, please wait till such time we get that particular indication. Now let's look at the Bank Nifty. So Bank Nifty also has an excellent rally, but all these rallies, again I'm putting with a pinch of salt that this has not come on the back of a global rally. Right now we have got all this rally based on MSCI rebalancing, Chinese yuan problem and all. So whether this is going to sustain, or probably it will again get tagged with the global markets, particularly with US S&P, definitely remains to be seen. Now even as we speak, we see US S&P not doing that great. It's only flat. And S&P in a cash market, see this is S&P in a cash market, and it is now definitely on the lower side. You see, it is now on the it is at 40.25, and the low till now is 40.17. So if it is going to break 40.17 US S&P, it is going to come much lower. It's going to come much lower to the next important support levels of some moving averages that could be. So we are not that bullish as far as US S&P is concerned. It may I told you the correct level for this could be around 3980 to 4000, but that does not mean it will not test below that. It can go below that. When it goes below that, it becomes some sort of a buy for a long term investment. So we should wait for when if S&P is going to come down. I'm not very sure that whether the Nifty can just start going, can keep just moving up on its own, even if there is a merit in the Indian market. Because even in the past we have seen that when there is a problem in India also, but if US S&P starts going up, we also have gone up. If US S&P has gone down, even if there is no problem in India, we have also gone down. So it's a question of very high correlation with that market, global development. So we don't see any reason why whether how this particular rally of today could probably sustain. So that is the reason why we are now looking towards wait for a dip, and then technically it looks bullish, no doubt about it, but wait for some sort of a correction, and the risk parameter that you should take in the Nifty should not be more than the high to low of a particular day, and we should keep it closer to 150 to 180 points. Even for position traders, that should be the maximum stop loss that you should employ as far as Nifty is concerned. Now when you look at the Bank Nifty, let's say so the Bank Nifty again excellent rally, and we have seen this is the 5-day, I think. So the 10-day moving average is coming closer to this level. So it went down, and then again it has gone up above that. So look at the 5-day moving average. Okay. So the 5-day moving average also is now closer to this place. So I think we should be 38,902. So any fall first can have some support closer to 38,902, 903 levels. So this can be used for any no intraday pullback, and if it starts to move much lower below that, then we can put in a stop loss. So right now we should be looking towards Bank Nifty also to be bought on dips. So wait for a dip, and this gave a good decent opportunity today, because this was a higher low compared to the previous low right here. So we could probably we could have, if you had got it not much of a gap, so we could have probably gone long here about 38,397, keeping 37,943 as a stop loss, which means around 400 points, which is it's okay as far as Bank Nifty is concerned, because that is the one day range. So we should look towards something like that before you go for that as far as position trade is concerned. Now the same thing, if you look at it, if you're getting it on the higher side, we should look towards the hourly chart. So hourly chart, we should be looking towards higher highs and higher bottoms. And yesterday, if you look at the Bank Nifty here, see, this was the bottom, and then this was confirmed as a bottom when this was taken up, because we have higher bottoms levels, right? Higher bottom levels. Now, then in that case, it did not penetrate this low. If you see, this low was not penetrated. Then it would have confirmed as a because this is an inside bar, so we leave it there. So this should have been taken off, right? This should have been taken off, which was not. So here we have a confirmed higher highs and higher lows as far as the 1 hour chart is concerned. So if only we had been lucky, we could have gone long above this particular bar, which is 38,302, keeping 38,160, 140 points as a stop loss. So in the 1 hour chart, if you go, we have to keep 140 points as a stop loss. Now the same thing, if you look at it, the previous day we could have gone short here. This is the place, that is 39,102, keeping 39,337 as a stop loss, 222.30 points. So the ideal thing in the present situation, the volatility is concerned, I think we should be looking more towards the what I would say the hourly chart, to look towards higher tops and higher bottoms for trading purposes. Now the same thing which we apply, if the same thing in Nifty, when we do that, see here is a case that we had a bottom here, then probably this is not a very, this is an inside bar. So here this is the case, okay. This is the bottom, okay, and once it starts to move above this, we can keep a stop loss. But here today it started to move with a gap up, so very difficult call to take immediately unless we are willing to accept a bigger stop loss, which is opening as 488, and the stop loss is 291. So it's unusually a big stop loss for an hourly chart. So only because of the present situation, very difficult to believe that this could have happened. So by hindsight, we could say that probably yes, we could have gone long here, but a difficult call to make as far as this one is concerned. And otherwise, no, there are many possibilities before where we could have gone with higher highs, higher bottoms and tops, where we could have made some profits much easily. So this is the chart as far as Bank Nifty is concerned. Now we will look at some of the stocks which made big news. That is, look at Reliance. So Reliance, if you look at the daily chart, slightly choppy, and so this position is holding. So this level is holding, but nevertheless we are seeing some sort of a lower tops, lower bottom, lower. This one also is coming. So I think right now this is taking this is likely to get sandwiched between these two levels, 2575 and 2670. So probably we need to see whether it is able to hit above 2670, in which case we have to buy about 2670 and keep that bar low itself as a stop loss, which is 2635. So on a daily chart, if it starts to move about 2670, we need to keep 2635 as a stop loss and trade. Okay, so right now let's look at ICICI here. We are all looking today only from the technical point of view. say on a daily chart today, yes, we could have got a long position easily because this was a higher bottom compared to this. So when it started to move above 861, yes, 861 with 847 stop loss, 861 with 847 stop loss, we could have gone for it. So right now it has broken this high, right? So it has broken this high. So the stop loss, now we are moving it back to this level low, which is 866. So since this high has been broken, now this low as the stop loss. Now if this high is still not completely broken in a proper manner, but if it starts moving above 890, then put this low itself as a stop loss, which is 875. So if it starts to move above 888 in a significant manner, we have got 888, so it just went up to 1 or 2 points. So if it starts to still climb further, then go above this high and put this stop loss, which is 875 as a stop loss. So that's how you can keep moving your stop losses to some important levels, and keep locking your profits in case if there is going to be a bigger reversal that's happened. Because I say and all, the brokerages are putting it about 1100, 1200 also, but it is getting now richly valued. Now we saw in price to book ratio, it's around 4.4. I think it is coming to its historical highs. So I think we should be very careful as far as buying at a level which is substantially above the median level. So we should be quite careful about it. Now probably some of the beaten stocks is what we should look at it, and not the stocks which have already rallied. So the beaten stocks are mostly in commodities as well as IT industry is concerned. In commodities, generally the overall situation is not that good. So probably we'll have to look at IT, despite the valuations being still a concern as far as IT companies are concerned. So we look at the let us say TCS. So TCS, if you look when we look at it in the chart, now what's happened this week, we have to observe. This week, because this has made a new high, right? So this has made a new high here compared to the previous week. So what we are looking at is a higher bottom. Now higher top has already formed, so we're looking at a higher bottom. So in case if we get a this week high, let us say this is only Tuesday, right? Today is Tuesday. So let's look at the development for the next 2 days. And after that, if it starts going above the week high, then in that case we should look towards going on the long side. This we have to take the call and look towards going on the long side. So hopefully, we should not have much of that. Is only from the technical angle is concerned, because we are not very comfortable still as far as the valuation portion is concerned. Let's look at the trend line for this. This is a dropping trend line. Let us say where it breaks down. So next week when it comes, then in coming weeks it will have resistance closer to this level, which is the 34.28. So a final break of 34.28 will confirm that TCS is going to go for much higher levels in weeks and days to come. But right now, we should be looking towards buying in case if it starts to go above 32.26 levels. Okay. So now this is TCS for you, and we will look at ISTIC. We have looked at it, and let's look at Reliance. We have looked at it. Then probably we'll look at Maruti, which did very well today. Okay, Maruti for the last couple of months itself has been doing well. And right now it is going very closer to its let's say it's back getting closer to its historic levels of 9929. So it's still of course 9 to 10% away from that, but doing extremely well as far as the technical position of the chart is also concerned. Looks a little bit choppy up and down, but it's still doing very well. So some of the stocks we identified last week, also growth stocks, at the same time buy on dips. I think we identified Coal India, then TVS Motors. These two companies we identified because quarter to quarter performance is extremely good as far as these stocks are concerned. So let's look at the Tata Motors, TVS model. Tata Motors is very difficult to buy based on fundamentals because it's still loss making. Sorry, monthly chart extremely bullish, so we need to wait because it's a very parabolic rise. And daily chart, see, yesterday there was a fall and immediately it was taken up. There was a fall and it was taken up. So this is how the companies which are doing on a quarterly to quarterly, the companies which are doing very well in profits are concerned, no, their stocks tend to be taken up very significantly. Here there was a chance of a there was a small lower top formation came here that was below 950, keeping 966 as a stop loss. Today it started with this thing, so 960, when it started to move above 960, we should be looking towards exiting the position, and open itself was 964. We should have been out of this market immediately, and we should have even gone long as far as TVS Motors is concerned. But TVS Motors is one stock which is doing extremely well. Tata Chemicals is what we also observed as both as a growth stock as well as value stock. And on a daily chart, it has shown some reversal today. It has shown some reversal, and after a big development, it is now getting clustered around this level. That is the basically between 1180 and yesterday's fall, which is 1050. So let's wait for some correction to take place before we can go look towards going on Tata Chemicals. Coal India is another stock which we have already marked it. See, Coal India again, companies which have done extremely well on quarter to quarter basis. The moment we got a dip yesterday itself it was a full blown rally. Immediately we got a full blown rally, and today it has taken up higher. But despite being a PSU stock, considering this considering its performance, the stock has done extremely well, and it will continue to do well for some more time. So the stocks which we identified as good levels to buy, that is buy on dip stocks, all continue to do well after today's fall, and it has taken off above the previous highs. That is Coal India, Tata Chemicals slight softness is there, TVS Motors, all these things have done well. And even companies like if you look at Eicher Motors, Maruti, we talked about it, and let's look at Eicher Motors. Bajaj Finance also, we had a look at it. See, Eicher Motors also, we have of course this is a low, this is this one, so we need to wait for some more time for the technical setup to happen here, because it has formed a lower bottom. It has formed this is a bottom, this is a lower bottom, so we will not go short but right now. But if it starts to go below any corrective bar low, then probably at least we will look at putting some sort of a trailing stop loss for any long position, and then wait for the pattern that we have been discussing till now to emerge before we go for a long. So this is Eicher Motors. Then we look at SBI. So State Bank of India, now we got a good pattern here. This is the bottom, and yesterday when it fell, there was no new bottom made, and today when it started to rally above 517, it was a buy. It was opened itself as 518.20, and it was above 517, it was a buy. So SBI looks very good on the daily chart also, and it has been brokerages are marking it for even 740, 750 levels in coming months or coming years. So here it looks as if there was a corrective pattern, and that corrective pattern seems to be getting over right now. So on a weekly chart, it's slightly still not, it has to clear this particular high, which is 535. Now it is still 531, so it has, on a weekly chart, it has to clear 535 before we go for the long side. But on a daily chart, it was already up. So some of these stocks are done this one, but reasonably bullish, and Indian markets generally and most of the stocks are looking extremely good. But look at what's happening at S&P. Even now S&P is falling. Even now S&P is falling. Okay, so this is a weekly chart. So we need to wait for some sort of a break above any particular week high before we can go for a long. So here we are looking at the important last important support coming closer to 3950, and if 3950 is going to be broken, then probably it will indicate that this is only a correction, because if it is an impulse movement on the upside, this should it should hold above 3945, 3950. If not, then in that case we are looking for retesting of the bottom of 3600. So we have to be quite careful. Already now we look at the Fibonacci retracement of 61.8% of the third of this wave. So the 50% comes at 3950, and 3950 also forms the important top. So 4022 has been broken, 4094 has been broken, 4183 is gone. So 3950 is going to be the last important level, and below 3950 I think we are looking at this pattern being only a corrective, whatever rally that happened, and we should be revisiting the bottom of 3635, which is not a good augury for Indian market also is concerned. So please keep watching and try to correlate with the markets, with the US markets also, before you get overtly bullish. So wait patiently for dips to come before you go for investment. So with that, I'm winding up now. So please ask your questions. Thank you. So thanks for your participation. Have a great holiday tomorrow. Thank you. Bye.